partners JP Group, no dream too big. Official tabulator Ernst & Young. Outdoor media partner Global Advertisers. On-ground partner Barista Lavazza and Overdrive.
This is TV18. And you're watching CNBC TV18.
Presented by HSBC Commercial Banking.
Being an entrepreneur is very tough. At every stage of the business, there are too many pulls and push. There are hurdles, there are temptation, and there are unsolicited advisors. But I think there are more pressures and temptation when your business is reasonably successful. Suddenly, you become the most sought after commodity. Everybody from PE players to bankers to stockbrokers start befriending you. In most cases, entrepreneurs do get tempted or swayed by these so-called friendly people and their advisors. The result, they start over-leveraging the balance sheet by rapidly expanding or diversifying into uncharted territories. And one fine morning, they wake up to discover the business is snowed under huge debt. By the time they realize the gravity of the situation, it is too late. Perhaps realizing the price one pays for blindly listening to third-party advice, Qimat Rai Gupta, the man who built Havells from scratch, never got tempted or swayed at any stage of his business life. Take a look at the Havells success story. You will know how to make it big by being intensely focused on your strong points.
If your mind can conceive it and your heart can believe it, you can achieve it. This famous quote is also the mantra of a corporate achiever in India. 53 years ago, this man conceived a business idea, then put his heart and soul into it, and finally went on to achieve his dream. Meet Qimat Rai Gupta, the 74-year-old founder of Havells India, whose 10,000 rupees investment in 1958 in a trading firm in Old Delhi has now grown into a billion-dollar global company. Havells has 4 lines of business. They are cables and wires, switchgears, lighting and fixtures, and electrical consumer durables. All these products are made at its 11 state-of-the-art plants located in Haridwar, Baddi, Noida, Sahibabad, Faridabad, Alwar, Neemrana in India. Abroad, it has 7 plants located in Europe, Latin America, and Africa. Besides, all these products from these 18 plants are sold under the brand names of Havells, Crabtree, Sylvania, Concord, Luminance, Linolite, and SLI Lighting. What makes this Desi company a formidable player is its high-quality products, strong distribution network backed by aggressive brand-building exercise. Little wonder Havells commands a respectable market share in a space dominated by giants like Schneider, ABB, Crompton Greaves, Phenolux, Polycab, L&T, Siemens, Legrand, Bajaj and Wipro. And this dominant position in the marketplace has translated into a healthy top line and bottom line for the last 37 quarters. For the year ended 31st March 2010, the company earned a net profit of 303 crore rupees on a consolidated turnover of 5,613 crore rupees. And for the second quarter ended September 2011, its consolidated turnover grew by 19% to 1,585 crore rupees, while net profit grew by 16% to 81 crore rupees. And this good performance is mirrored in the stock markets. Even in today's bearish market, Havells' share price is trading around 395 rupees after a 1:1 bonus issue in October 2010. Well, these strong performances have certainly put a smile on the face of its stakeholders and increased the worry lines of its competitors. But 11 years back, nobody would have noticed or betted on this Delhi-based company. Then in 2000, its turnover was just 100 crore rupees. So what happened in the last 11 years? A lot.
Over the past decade and a half, since I would say 90s and 2000s, we have been investing very heavily into our operations in India, because all the multinationals were coming to India and we needed to compete with them. So we started developing our own plants, our own working style on a very global kind of a manner, very international scale. And we started exporting as well. And we were doing a fair bit of exports from beginning of 2000. But very soon we realized that, if we want to really capture the market internationally, we have to be present locally. And the easiest way to do that was with an acquisition.
That opportunity presented itself in 2007. In a daring move that raised the eyes of many corporate watchers in India, Havells acquired the German-headquartered Sylvania for 227.5 million euros. The whole deal was swung in 100 days. At that point in time, Sylvania was 1.5 times larger than Havells, whose turnover was then 1,000 crore rupees. But the Guptas knew that the acquisition of Sylvania would be a game changer, as it was the world's fourth largest player in the lighting space, next only to GE, Osram and Philips. Besides adding to the group's turnover of nearly 500 million euros, it would give Havells instant access to the latest technology, R&D and a toehold in over 50 countries. Even before the Guptas could bask in glory of their Big Bang acquisition, they were hit by a bolt in the form of global recession in 2008. This severely dented Sylvania. Its revenue declined from 515 million euros in 2008 to 413 million euros in 2010. So, surgical intervention was needed to turn it around.
Sylvania has gone through turbulent times after acquisition because of recession in the European markets. What was required a surgical operation to cut down significantly the costs. So what we did, we focused on bringing the company on a growth path through cutting a lot of these costs which were sitting in the system. So finally we focused on the factories. So first we shut down a factory in Brazil, in UK, in Costa Rica, across the world. And also we reduced the strength of certain factories. We also shifted a few of the products both to India and China to leverage on the cost and bring more profitability in the business. This entire thing was over 9 to 14 months.
The acquisition of Sylvania and its successful turnaround suitably impressed well-known private equity player Warburg Pincus.
Our association with Havells started about 4 years ago, and I'd say, as long-term private equity investors, there were a few things that interested us and attracted us to the company. I'd say the first was they had a very strong track record of growth and value creation over the prior years. Second, what impressed us was that in each of their product categories, the company had a very strong positioning and were seen as leaders in the market. I'd say third, in terms of the various categories and businesses that the company was in, we thought there was runway for strong growth in the coming years, driven by sort of a consumer aspiration to quality, a move to branded products in general, and also based on the initiatives that the company had. And I'd say the last and probably the most important was just a very distinctive entrepreneur in Mr. Qimat Rai Gupta and then Anil, and a management team that they had created, and their own aspiration and outlook for what they wanted the company to be, but also their willingness to involve us as engaged partners in that journey. So I'd say a combination of those factors interested us, and actually we ended up not owning 11%, but we increased our position to own close to 15% of the company over time as we continue.
With Sylvania taken care of, the company, whose bread and butter business is switchgears and cable and wires, is now getting very aggressive in the electrical consumer durables with more launches as this segment is growing at 40% per annum.
We have been a switchgear company. I mean, if you go to the history of the company, it's been essentially a switchgear company. First initiative that we took was in year 2003, that we got into consumer electricals together. And that's the time we got into a fan business. Last year balance sheet, almost 30% of the business has come from the new product categories. That's lighting and fans. That's the time that we were looking at the next expansion. Now, of course, the natural corollary or extension to getting into geyser was to get into small appliances. Small appliances is a large basket. You have kitchen preparation products, you have garment care, you have the home comfort product categories.
Besides the domestic market, the Guptas are getting ready to leverage on Sylvania's brand distribution in the overseas market. Havells switchgear is now being sold in the UK. This will be followed in the entire Europe and Latin America. Looks like the Guptas are firing on all cylinders. Time for a short break. When we come back, we will talk to Qimat Rai Gupta, the man who founded Havells, and his son Anil Gupta, who is steering the company into the next growth path. Also joining us on the show is Sandeep Uppal of HSBC, giving us the banker's perspective.
The iPhone 4S has an all-new camera with 8 megapixels and advanced optics.